Let's start with the country's largest meat packer, Tyson, once again, soaring beef prices, denting sales, annual adjusted operating income of $2.1 billion to $2.3 billion for 2026. So that's they've lowered the range there.
Okay.
This weaker outlook suggests Tyson's efforts to reduce production capacity they've yet to really have any significant impact. Tyson has ceased operations at the Nebraska beef plant. They cut output at a Texas facility. This was supposed to cool competition for cattle and improve their margins. Well, it hasn't shown up yet. The lower guidance also comes despite some recent glimmers of hope, including a planned resumption of cattle imports from Mexico. Also signs that ranchers are beginning to rebuild their herds. But again, these developments, they aren't likely to benefit packers for some time. Tyson is now expected to post an adjusted operating loss of $500 million to $650 million for the year, deeper than some of the prior expectations. One bright spot, though, the chickens.
Chicken.
So
big chicken fan.
AstraZeneca, of course, in the news this morning, exploring an acquisition of Bristol-Myers Squibb of Princeton, New Jersey. According to our sources, potential mega deal could rank as the largest ever in pharma. And you got to wonder, like, what are they going to say in the UK, and what are the regulators going to say here? The companies have held early-stage discussions about combining. These, of course, are two cancer powerhouses. It would form the world's biggest drug maker with about $107 billion in annual revenue. Bristol-Myers Squibb could provide Astra with a bigger foothold in the U.S. market. They're preparing for the loss of patent protection for some of their biggest products, including their blood thinner Eliquis. Last week, Bristol reported quarterly sales of $13 billion, its highest ever. You'll recall back in 2012, AstraZeneca fended off Pfizer takeover attempt there, and the UK government had to get involved over fears they'd lose one of their companies in the UK.
You can't imagine these, or at least I can't imagine these two companies getting regulatory approval, but we have an administration that is really open to some of these mega deals. So maybe the time is now. That's what we've been hearing from M&A bankers, that if you want a mega deal, now is the time.
I don't know who would take this, the bankers behind this deal. I mean, you got to imagine like they're pressing for this because fee.
Sure.
After the close of regular trading tomorrow, Isabel, SpaceX.
Yeah.
I'm excited. I wonder if Elon Musk will be there.
He has to.
He better be there.
Has to be. That's the only reason people bought the stock.
Yeah, I don't think the financials are gonna tomorrow are gonna matter as much as the commentary from Elon
It'll be great.
During the call. Anyway, they'll be listening for progress with the Starship mega rocket, the availability of semiconductors, regulation and shortages of AI resources. As you know, a lot of institutional investors they were sour on this to begin with. Because in part because of the unprecedented control that Elon Musk has over SpaceX. They consider it a little too risky to hold. Musk sits on over 80% of the voting rights. The company's chief executive, chief technical officer, and the chairman. It's a setup that one pension fund has called catastrophic. And then, of course, there's this. Just a few days after earnings, the lockup ends. So regardless of how good or bad the results are, 911 million shares are subject to the lockup will be released.
Very good. John Tucker, thank you so much. Appreciate that. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen.